you look at the higher time frames, I mean, yes, price seems like it's like chopping around, right? We made the high of the all-time high. Actually, we formed all-time high. So what does that mean? If we form all-time high, be looking for longs, we should only be looking for continuations higher. Other than that, we should be looking for a reversal, because the fact that we've cleared all-time highs, price is going to want to start running the opposite sides of liquidity. So that being said, automatically we are looking for sells. I have this new day opening gap annotated on my chart. Um, Normally I get off work at like 3 a.m. So whenever I get off work, I'll look at the chart. So it's about right here is like, and then I'll see what price is doing. So this is it. Whenever I got off work, this is what the chart looked like. Automatically, I'm looking for shorts. Why? Because we cleared all-time highs. So now I'm looking for lows to be ran automatically. Automatically my first target. So I drop lower. Fast forward a little bit. I get on the charts at like 9 a.m. Nine a.m. So this is what the chart looked like whenever I got on at 9 a.m. What is my bias? Fair value gaps are holding bearish. This would have been a phenomenal entry, but I don't trade until after 9, well 9:30 to be exact. But I annotated this just because this lets us know that fair value gaps in price and efficiencies are holding bearish. That being said, this is more of a confluence that price is probably running sell sides of liquidity. Before we even start to look for a trade though, we want to look at news. So on Wednesday, we take a look at the date below my cursor. Is the 19th. We have two red folder releases, FOMC at 2 p.m. and the president at 5 p.m. So this day wasn't really, we didn't really have to worry about news this day too much because we traded in the morning. So what is price doing? We have a gap right here. At 9:30. First, I'm gonna say this. At 8:30 and 9:30 is when you want to look for runs on liquidity. This is when you can look for a bias in the opposite direction. So at 8:30, you can see right here, 8:30, we formed the low. This can also be a run on liquidity. And then again at 9:30, we run. So we drop lower. Now, because we ran sell side, we're looking for a long. So we want this gap right here to hold. So this at first was our bias on the day. So we looked for a long, aiming for these highs. This would have been a continuation model. Like I said earlier, we only look for continuation models long because we are at all-time highs. So because this fair value gap is holding bearish. Most likely, the higher time frame is bearish. But because we ran this sell side liquidity, and then boom. Now this is an inversion fair value gap. Now, wait. I gotta cut this off. So, at first, this was my bias. I'm thinking this gap is holding, right? And then we got the tap. So I entered long. You automatically seen what price did, but yeah. I entered long, aiming for these highs. We immediately got stopped out. So now, these are our two gaps. Again, holding bearish. Automatically, I start looking for shorts. Holding bearish. I entered short right here. Now it's best to enter short inside the fair value gap, so it's most likely a bullish candle whenever you're entering, but I can't really show you that on replay. So this up here would have been a great entry. What is our target? If we zoom out, just aiming for lows. That smashed. That's whenever I closed the trade here. I think I'm pretty sure. Yeah, because I seen this was starting to hold this gap right here. So this was my target, but I closed the trade. We can drop lower. This is probably a break structure, right? Okay, so you know that's a break of structure. Another break of structure on the higher time frames. Now we can drop lower again. And you can see price ended up hitting our target. Do we get upset about it? No. Just simply comes down to management. So we were a little impatient on the entries. This would have been a beautiful entry. I didn't know how to read fair value gaps. I recently just figured it out, the secret sauce. So on whatever time frame, you mark up the fair value gap. So let's say it's a 15-minute fair value gap, okay? 15-minute. Now you drop lower to see what is price doing. right? If it is not trading higher, you can drop even lower, and that is where you start to look for your short. See, so this was our gap on the higher time frame. It trades back to. You don't want to see price continue higher. It's holding. At any moment is a beautiful opportunity to enter short. Now, when you enter short, you set a limit. This stop loss is, let's say, what are you comfortable with losing? Are you comfortable with losing $50, $100, $200? So on my prop firm account, I think the daily drawdown is like $300. I think that is the max amount that I'm allowed to lose in one single day of trading. So I automatically try to keep my stop loss between $50 and $100. So let's just say that's our, at this level is where $50 is. So you can change how much you're risking, and that will change where you can set this. So let's say you risk 1%. At here is $25. So now you can either put your stop loss up here, or you can risk more now. So now you can risk 2% because, and then just what's your target? Lows, because you're shorting. But I don't really trade in this, but that would have been a beautiful effing trade. But now you can see why I couldn't get an entry, because price was accumulating, right? Price was accumulating right here. You can even see these two wicks aren't touching. This is our fair value gap. You mark it up and wait for price to trade back to, and this is where we went wrong. We were just continuing to look for long. This would have been a beautiful minor trade, only we should have closed the trade right here. We should have closed the trade right here, but instead we held it and closed it break even, because it traded back to our entry point, so we closed it at break even. This little minor fair value gap would have been a beautiful entry. So, but on the higher time frame, our context was this fair value gap. At this point, price still hasn't filled this inefficiency in price. That is why it's not continuing higher yet. That's why we took a loss, because it was an early entry. This would have been a better entry. And then we can also continue. I actually missed the effing trade. I was so pissed off myself. This was eventually my target. Previously lows. Gaps are holding. I completely missed this trade. I slept completely through it, but this would have been my entry. Why? So we tied in SMT. SMT. See how, and now we're trading. I annotated this gap, but price already made its move. I completely missed this trade. I would have entered right here because this was a fair value gap, a 5 minute, right? We're on the 5 minute, and this is the gap, and we drop lower. Price at this point is where price inversed because it's trading lower. This would have been a beautiful entry, but I completely slept through this whole trade day because I decided to stay up until 4 a.m. And then yeah, I was like, all right, I'll set my alarm and get on the chart at 9:30. Didn't wake up till 11. But this would have been a beautiful entry because 9:30 was right here, right? So what are we doing? What is this? This is probably a run on liquidity, and then we trade higher. And we're not trading any higher, like creating highs. In fact, I was so pissed off at myself on this day when I woke up and looked at the chart and seen this. I was like, because I looked at the chart whenever I got off work, and I'm like, all right, we're most likely gonna now start running sell side. So when you get on the chart, automatically look for shorts. So I'm like, all right, I'm gonna set an alarm. Boom. I was so pissed off at myself. But that's the lesson. You don't catch everything. So mark this up. Probably a run on liquidity. If we're bullish, we only, at this point, we want fair value gaps to be holding because we ran. Now, to be looking for longs, we would be wanting price to trade down and continuing higher. Combining that with we only trade after 9:30. So I'll show you. If you were looking for longs, you would have wanted this to be holding, like you would be wanting this area to hold it, but it completely trades through it. That is a sign that price probably doesn't want to run buy side. So this was a beautiful entry. Beautiful effing entry. You got the fair value gap. Price is staying below the lower quadrant. This would have been a beautiful entry right here at this point. You could have entered short. Aiming for all these lows. So that was the first entry of the trade session. We also try to look for S&Ps. And we also try to tie that in with the 8:30 and 9:30 run on liquidity. So fast forward. Got another gap. think at this very moment, I entered short right here. So, and my stop loss at this level about right here was where it's like $60 stop loss limit, and my target is these lows, and then maybe even lower, but our first target is those lows. Then we watch price to see if it wants to reverse or continue. This was my target right there. No, I'm gonna show you why I was so upset with myself. So, boom, we hit that right, and we just closed the trade instead of moving our stop loss and managing. We just closed the whole trade. Take a look. Okay. We got previous day lows. In a bearish scenario, that's what you want to be ran. Previous day lows. And we already had this mark. Equal lows and a fair value gap. Watch this shit. Okay. This is why you backtest and see where you made mistakes. Now, I was happy with we were able to close in a win, right? Fair value gap holding bearish. Previous day's lows ran. This was my target. So, first error, I closed the trade too early. Second error, I was like, man, what? That's why management is key. Trade management is key. You set a stop loss limit. How much are you comfortable with losing? And then you aim for max gains. What's your target? I completely forgot about these equal lows and this gap right here. It was marked on my chart, but I didn't even acknowledge it. So you look for a gap. This was a gap. Mark that gap. Drop lower. You want it to hold. You don't want it to trade higher. It's not trading higher. You drop lower. What's it doing? Staying below. At any point, you can enter short. So you enter short. You set your stop loss limit at $50. And then you set your target. And then that's how you trade.